John, thank you so much for being here today. I'm so excited about our conversation.
Thanks for having me, Kia.
I have to ask you, why did you decide to take this job right now, especially given how unpopular politically climate change and fighting it has become?
Part of it is personal, part of it is professional. On the personal side, Tom Steyer and Katie Hall, who are the co-founders of Galvanize, I have known Tom for over 30 years and Katie for over 20 years. Tom's prior firm, Farallon Capital Management, was the largest shareholder in my two prior companies. I started my first company in 93, took it public in 96, and I ran it as a public company until I sold it in 2000. And then in 2000, I started my second company, took that public in 2003, and ran that to 2012. And Farallon was the largest shareholder in both those companies. And Katie Hall's prior firm, Hall Capital Management, uh, advised clients who were big shareholders of my second company. So I've had a business and personal and friendship with Tom and Katie for a very long time. So that was a big part of it. Also, I just, um, again, my background, I started two direct lending business and then I served in Congress
Mhm.
in what many of my friends describe as a midlife crisis, I will say. Uh, but it was actually a privilege of a lifetime. But it was while I was in Congress, I became very much focused on climate and energy transition and the role of the private sector has to play in driving and building the low carbon future that I certainly want. So post public service, I decided to dedicate my career to taking my skills, building large scale lending businesses. And both of my companies, again, were publicly traded, large scale direct lending businesses, and combine that with my passion and policy interest in climate and energy transition. And so when Tom and Katie were building the Galvanize platform and they asked me to partner with them and share and help build the credit strategy, it aligned both with my desire to work with people I really like and know, but also with my view that this is an incredibly not only important but potentially exciting and very rewarding business opportunity. So it's kind of both the professional and the personal.
Wow, I wish more people having midlife crises went into public service and
Right. Yeah, there are
like
there are.
yourself.
I joke. I use that term because I guess how old was I when that happened? I was 2012, so I was in my late 40s. Uh, there's people have lots of options for midlife crises. This is a good one, I suppose.
Yeah, I mean, it's probably more climate friendly than buying a bunch of Ferraris or
Yeah,
whatever people
exactly,
do.
exactly.
Um,
But it was an amazing privilege. It's an extraordinary country, and the privilege to serve it is very unique.
Well, I would be remiss if I didn't ask you about the current AI boom and all of the energy demand that it's asking from the world and
Right.
the planet. Um, what do you make of that? Especially with all the data centers cropping up seemingly everywhere, but
Yeah.
probably in your neck of the woods, right across in
Yeah.
Virginia.
Yeah, in Virginia, it's interesting because, obviously the ad demand is extraordinary, and the amount of energy needed to fuel it is equally extraordinary. As I think Sam Altman said the other day, electrons equal intelligence. In other words, creating a direct linkage between energy and electrification and our ability to advance artificial intelligence and the collective capabilities of the world. I'm generally on the side of an optimist about technological innovation. I think across time, by any measure, innovation, whatever kind of innovation, and more recently technological innovation, has made the world better, safer, and more prosperous. That doesn't mean it makes every human being better, safer, and more prosperous at every moment in time. It doesn't. But in general, it improves the condition of humankind. So I'm very pro innovation. I'm very pro AI and what it can do. I tend to be an optimist about it. I'm not a pessimist about it. Not because I'm smarter than anyone else, but I just think that the history of innovation has led us to conclude that the facts favor the optimist. And the demand curve that is projected by it is extraordinary. And again, I'm not smart enough to question it. You know, I go off the projections everyone goes off of, and the capacity we're going to need and the energy we're going to need to fuel it is breathtaking. Now, is there a chance that innovation also changes that energy curve in some ways, or changes the demand curve? Yeah, There's absolutely a chance of that because, one of the problems we have right now is we need too many data centers, and we need a lot of energy to fuel them. And so it wouldn't be surprising to me if innovation actually, without reducing the growth of AI, also reduces the demand for data centers capacity with new and better chips, et cetera, and energy needs with also similar innovation. But, I'm pretty bullish on it all.
Do you really think that, innovation in energy would reduce the demand for energy? Because I feel like historically, making things more efficient has just led to wanting more of it
Yeah,
because we
no, I
have
think
it more efficiently.
no, I think innovation in manufacturing and in, chips and processing power, et cetera, that could make energy demand. I don't think energy demand is going down, but I do think similar to, and because you think about what happened in the world kind of for the last several decades is energy growth grew at less than global economic growth. So in other words, global energy demand lagged economic growth. And people say, well, how is that possible? Because there's a direct correlation between energy needs and economic growth.
Mhm,
And the reason that happened was because we actually did become more efficient with how we used energy. So even as the world was growing, we were becoming more and more efficient with how we used energy. So which is
mhm,
why energy demand lagged economic growth. Right now, energy demand is exceeding economic growth, right? Because all of the AI and technological investments that are being made are actually being, I mean, if you think about OpenAI's revenues compared to the amount of money they're spending. Do you see what I mean? So it's
yeah.
a little bit going the other way. But would it surprise me over time if technological, innovation and growth becomes more energy efficient in terms of how it uses energy? No, that wouldn't surprise me.
Do you think that, the energy industry, the data center industry, the AI industry, do you think they, market forces are going to naturally lead them to, not only more efficient, energy production and all that, but also just more climate friendly ways to provide that? Or do you think that government needs to step in and steer that in the right direction?
Well, I think what'll lead to more climate friendly ways is not because they want more climate friendly ways. They do. Let's face it, the big technology companies for a while announced that they wanted to have their energy demand satisfied with clean energy. And then the growth of their energy demand just outpaced their ability to keep those kind of commitments, and they just said, "We need the energy,
Mhm,
period." But I do think where we're gonna get the marginal increase in energy is from renewables
mhm,
or other sources of clean energy, nuclear, et cetera. And so I think without them specifically prescribing that the energy is gonna be low carbon, let's put it that way. I think a big part of the demand will be satisfied with it because it is the fastest and cheapest source of incremental energy.
mhm. So you think the market forces will win out mostly because renewables and clean energy are going to just be better?
Yeah, I think the market forces, if you look at the signals the market is saying, the signals the market is saying is we need more energy, right? That's the clear and unmistakable signal.
Right.
And, for a long time, this country had a debate about where our energy should come from. There was the fossil fuel camp, which I'm not in, and then there was the renewable camp. And then there were some people saying we need the all of the above. I think what the market is saying right now is all of the above, right? The market just wants energy.
Mhm.
Now, if you look at where we can get exponential energy growth, it's actually from renewables because they are cheaper and faster. Putting aside the fact that they're cleaner, the market's not going to make decisions based on that. They're going to make decisions based on speed to market and cost.
Right.
So I do think the market is not saying it wants clean energy. The market
Right.
is saying it wants as much energy as possible. And where can it get it cheaper and faster? It's from clean energy.
Mhm. Do you think government should have a role in that?
Absolutely. So I was a big supporter of the Inflation Reduction Act. You know, when I had the privilege of serving in the Congress of the United States, I every year introduced a very large piece of legislation around carbon pricing,
Mhm.
with my view that, we subsidize fossil fuels, and we should price for the cost of them. And we could do lots of things with the money, including just giving it back to the American people in a dividend, so the kind of the carbon pricing and dividend structure. So I'm a strong believer in public policy that accelerates this transition. Now,
Mhm.
they also am a very strong believer that you can solve climate change on the back of working families. So
Mhm.
you cannot create a government policy framework that, while it may accelerate energy transition, increases costs to hardworking Americans,
Mhm.
right? So the framework for public policy has to be acceleration of, from the continuum in, research and development. One of the most successful research and development programs in the federal government, even more successful than NIH, which is the marvel of the world, is actually the basic research that was done in the Department of Energy. It's been extraordinarily successful if you look at the ROI. So,
Mhm.
so I'm in favor of public policy that encourages basic research. I'm in favor of public policy that creates incentives for the deployment of renewable energy assets. I'm in favor of public policy that brings back a safe, reliable nuclear energy industry in the United States. And I'm in favor of public policy that accelerates permitting reform so we can actually build the grid and the energy infrastructure, the clean energy infrastructure that we need. And I'm also in favor of public policy that takes a look at that whole continuum and figures out how the right way to do it so it doesn't increase cost to consumers.
Mhm. So I'm going to ask about the Inflation Reduction Act in a second, but since you have been both in Congress as a legislator and you've also been in the private sector, how do you, now that you've done both, how do you think about the best ways for both sides to work together? Like, what are their weaknesses and strengths? How should they take on this problem?
Well, the each side has a weakness, and the
Hmm.
weakness for the private sector is short-termism, right? There's an enormous amount of incentives in the private sector for short-term results.
Hmm.
So a lot of advocacy work slash lobbying work that is done in Washington is done for short-term gains for corporations, and a lot of these problems are long-term problems.
Hmm.
And the public sector has the similar problem, which is they have elections,
Right.
and elections get in the way of good long-term planning because, incentives matter and politicians are incentivized to get reelected. So, which is the essence of the US government is the most extraordinary thing ever created at responding to a crisis. If you look after various crises across our history, how the US government responded to the crisis, the resources it was able to marshal, the programs and things it was able to launch were extraordinary. What the US government is not particularly good at is responding to long term to responding to what I'll call slow moving crises. Crises that don't appear to present an immediate sense of urgency, but are crises nonetheless. The best example of that is the fiscal condition of the country. It's clearly a crisis, and everyone knows it's a crisis, and everyone talks about it being a crisis, but no one does anything about it because it's not actually causing short-term events that they have to respond to. And so the ultimate problem with the public and private sector working together is they've got to align a little bit more on a long-term plan. And, that's I mean, look, there's no question when the private sector, the public sector, and the nonprofit sector work well together, you get the best economic outcomes. You travel around the
Right.
United States, you travel around the world, you see situations where business, government, and nonprofits are working together, you get much better economic outcomes. And that's what we need more of in the federal government. But it's gotta
So,
have the right time frame and lens because a lot of these problems, they're big and they take time, and policy has to play out across time.
so if both sides are afflicted by short-termism,
Yeah.
even, slightly different time frames, but still short term, who's taking care of the long term?
Well, that's the ultimate problem. I mean, if you were to criticize the United States of America, which which I do believe, as someone who had the privilege of serving it, is the greatest country in the world. If you criticize it, you'd say we don't have a strategy. Like,
Okay.
we don't have a strategy. We don't have a strategy for our debt crisis, and we certainly don't have in my judgment, the right energy strategy. Um, and that's ultimately the American people are going to have to. The good thing about this country is we can change it all by
Right.
the people we elect.
Yeah, are you saying that the voters need to be thinking about the long term?
Do. Yeah, do. But we digress a little bit here.
Yeah, I mean, good luck with that platform.
Yeah. No, that's the problem. As I
Um,
said, it wasn't designed for that, right?
right. So back to the IRA. Have you been surprised at this current administration, like, hostility towards
Yes.
Inflation Reduction Act?
Yeah, what has shocked me is that I believe, because I founded something in Congress called the Bipartisan Climate Solutions Caucus, which was
Okay.
actually a group of bipartisan lawmakers, Democrats and Republicans, who were working together on smart policy to drive energy transition and, strengthen the renewable energy sector and deal with climate resiliency, et cetera. And there was, you know, even people like Marco Rubio were talking openly about, the climate issues in Florida, et cetera, et cetera. But this new administration has really had a profound hostility towards, solar and wind.
Mhm.
Not so much nuclear, right? I think they've been constructive on nuclear. And look at, I think some of the stuff they've done on rare earth, et cetera, has been really smart, actually, to be honest with you. But, again, I would have expected this administration to be much more of an all of the above energy strategy.
Mhm.
It doesn't surprise me that they're supportive of the fossil fuel industry. That's not a surprise to me. But what is surprising to me is the hostility towards renewables, because we're if you just look at the facts, and they have some very knowledgeable and skilled people in the administration who understand energy. And these people look at the facts and they know what the demand is. They know what China's doing. They know the economic opportunity around renewable energy. They certainly don't want to penalize fossil fuels. I mean, in some ways, I always thought of I thought the current administration would kind of be the Joe Manchin energy model, because Joe Manchin's energy model was very simple, which is, I'm fine supporting renewable energy. I just don't want you to hurt the fossil fuel industry because it's a big part of West Virginia. So I don't want carbon taxes. I don't want any of that stuff. But I'm happy to subsidize the energy infrastructure of the future. Right. That was kind
Right.
of his philosophy. And that's what I would have expected the administration to do, because they understand the energy demand. And I would have thought they would wanted to ensure that America was competitive in renewables. But the actions they took with the Inflation Reduction Act will actually obviously hurt the American competitiveness in these sectors.
Mhm. If there's one part of the Inflation Reduction Act that you could save or bring back, what would it be?
Would be the tax credits, the solar tax credits. I think
Mhm.
if you look at the residential solar industry is dead, largely because of the tax credits, and that was making great progress. And, there was so much optionality around residential solar. It could have been, with battery technology, it could have become, kind of a bunch of, effectively a whole series of backup power capacity for the grid. And there was a lot of innovation that I think could have happened there. And now the industry is completely sidelined, so things like that. This mass rush to, like, vest in your tax credits where no one quite knows the rules. I just think that's very disruptive.
Mhm. So back to your current job now that we've solved, all of the problems around
Or at least
energy
identified them.
policy. So you joined recently. I know Galvanize announced the new $1.3 billion credit capital solutions fund in September. Have you made any investments yet?
We just launched I'm the chair of the strategy. I've recruited a terrific team, including the former chief investment officer of the Department of Energy Loan Program, a gentleman named Chris Creed. And the Department of Energy Loan Program in the prior administration was the largest energy transition lender in the world. So we've got a great team. Chris, former CIO of the Department of Energy Loan Program, 20 years at Goldman Sachs before that. Megan Pastrika, who was at Riverstone, leading energy private equity firm where she did credit. Suresh Vasan, who worked with Chris at the Department of Energy Loan Program, and Anatoly Bushlu, who was a partner was an investor from Farallon. where we worked with Tom Steyer. So we got a great team, and we just closed our first capital raise, if you will, or part of
Mhm.
it. And so now we've got an active pipeline and a bunch of deals that we're trying to close before the end of the year.
Since you mentioned solar earlier, but, we still have a little bit of the tax credits. Is that an area
Yeah,
in the US that
absolutely.
you guys are going to be focused on?
I mean, we have a macro view that renewable energy assets will be more valuable than people think. And the
Mhm.
reason for that is, sadly, there'll be a somewhat of a shrinkage of supply while the tax credits expire and before energy prices go up to cause the next wave of development, and that existing assets will be very valuable, and that optimizing existing assets and owning existing assets is a good strategy. So, we obviously have to invest against the backdrop of what's happening with the tax credits and the implications there. But when we get certainty around that, we're very bullish on the asset class.
Do you have sort of a plan in terms of, first phase of prioritization and then maybe looking into other areas or other regions?
I mean, our strategy is very unique, right? So it's called a capital solution strategy, which means it's a combination of loans, but highly bespoke structured loans, both
Mhm,
senior and subordinate, in other words, mezzanine loans, and also preferred stock. So not common equity, but equity that's senior to the common. So it's kind of the middle of the capital structure. It's not bank loans and it's not common equity. It's everything in between. And we're very flexible with our mandate, meaning we can move around within that kind of middle section and we can
mhm,
structure unique solutions. And so we kind of lead with our flexibility and
mhm,
our ability to solve problems. We don't lead as much like our colleagues in the venture and growth business who are making, venture capital investing in the next wave of promising companies. They're much more thesis led. In other words, they have
mhm,
macro views about things that are going to be uh, much more valuable in the future, and they invest against those themes. We tend to be more situational, right?
mhm,
So a company comes to us and they're like, "This is what we're doing, but we've got this capital need that's not well met by bank debt, and we don't want to raise more equity because it's too expensive. Can you finance a solution?" So we tend to spend, obviously we focus on energy transition and decarbonization. That's all we do. But we can move around from sectors in a very nimble way. And our
right,
financings are out for 2, 3, 4 years. We're not the long term owners of the business. We're helping them
mhm,
finance typically an opportunity that they think will create a lot of value. Or maybe they got ahead of themselves and they didn't line up financing and their business is doing too well and they've got a liquidity squeeze. Those are the kind of things that we play in, which we think is the most attractive risk adjusted returns in the sector because we have very good downside protection and we earn equity like returns, but we're not involved in the situation for more than 2 or 3 years typically. So we tend to
mhm,
be less thesis driven, and we obviously have some underwriting themes. Like I said, solar assets we think will be more valuable than people think.
mhm.
We have some beliefs, but we tend to move around in a nimble, flexible, opportunistic way, solving problems for our borrowers, helping them create value and creating very attractive return investment opportunities for ourselves.
So do you expect you'll be mostly, working in with technologies that are, well
Yes.
established, especially
Yes.
economically?
We don't take technology risk and we don't take
Okay,
public policy risk.
okay.
Right? We wanna provide capital where we have strong downside protection, help
Mhm.
people solve a problem, and then, make an equity-like return, but we're not in there for 10 years, we're in there for 2 or 3 years. So even though it's an equity-like return, it's less money because our investment is not out for as long. So
Gotcha.
we call it growth credit or hybrid capital, because most of our situations are growing businesses that got a little ahead of themselves or they're a stable platform and they're seeing opportunities, unfortunately, based on the distress in the situation. And they need a flexible capital solution to either solve the problem, handle the growth, or allow them to execute on the opportunity quickly.
You keep saying companies that got ahead of themselves, that makes me nervous.
No, it's listen, I've been around financing. I mean, in my business career, I've financed 5,000 companies. And small to middle market companies that are growing fast, they're not like big companies.
Mhm.
Like Walmart will spend half the year in their capital forecasting and planning. They have
Yeah.
everything down. They have armies of people who project their cash flow and liquidity needs, right? They've got it all down. If you're an entrepreneurial company and your employees have gone from 100 to 300 in 2 years, and suddenly one of your competitors is under distress and you can buy them, you haven't lined up the financing to do that. You're like, "Wow, I've got this good opportunity. Now I've got to finance it." So it's the getting ahead of themselves part is typically for all good reasons.
Okay. Okay.
I mean, because
Good to know.
if you've got a 200 person company and it's growing fast, you probably don't have 50 people doing financial planning. You have a
Right.
CFO who's trying to build up their team, you know what I mean? Like, so companies kind of get ahead of themselves and they need
Gotcha.
financing. That's actually
Well,
what we're looking for because that's like a good reason to need financing.
totally hear you. So my last question to you, give me your top 2026 climate prediction.
Well, I think people are gonna wake up and realize that the, changes to the Inflation Reduction Act were really hurt US energy competitiveness, and I think that's gonna become the conventional wisdom.
Well, I guess we'll have to check back in a year. John,
Yes.
thank you so much for the
No,
conversation
thanks for
today. It was
the
great.
good and intelligent questions, and sorry to take us down some political digression there.
No worries. Thank you, John.